So you read that purple book, Rich Dad Poor Dad, and you got passive income on the brain, real estate, and you want to go out and flip a house, wholesale a house, or landlord a house. And that's the same thing I did, and I discovered that there's a better way to achieve passive income. So we're going to talk about the pros and cons of single-family house investing versus multifamily investing. So stay tuned for that. Hi, my name is Michael Blanc, and I help people become financially free with real estate. So when I read Rich Dad Poor Dad, okay, I had the same conclusion you did. I'm going to go flip some houses. In fact, I flipped 36 houses in 3 years, and I discovered that it was actually really problematic. And then I got into apartment buildings and then discovered it was a much better way to achieve the same goal of passive income much easier. So let's look at some of the pros and cons of single-family house investing versus apartments. One of the first things I found about single-family houses is that it was very active. There was nothing really passive. Number one, if I'm not buying, fixing, or selling houses, I'm not making money. And when I sell them, I stop making money as well. Now, I could hold them, but then I have to manage them. And I studied other people who have larger portfolios, and they tend to self-manage. I didn't want that. And asking a professional manager to do it was very expensive. Versus apartment buildings was actually managed by a professional manager. In fact, it was built into the business model. It's much more of a passive investment. Let's look at the loan, right? Loan with single family houses were limited. You can buy 5 or 10 different houses right now, and you have to personally guarantee it. I don't like that. With multifamily, you have unlimited loans, tens of millions of dollars, and they're what's called non-recourse, non-personally guaranteed. I like that a lot. Let's talk about risk. I did not like the way that single-family houses behaved in 2008. It was a catastrophe for a lot of people, and it was too dependent on the market, too dependent on sales comps in the market that I couldn't control. What I found with apartments is I can control the value by controlling how much income they generate. So the higher the rents I can make them by improving it, the higher the value, and they're much, much less driven by comps than single-family houses. All right, and finally, the reason we're doing all this stuff, right, is financial freedom. I found I could not get there with single family houses. I couldn't flip my way there. Landlording, I would have had to have dozens of units. And what I found with apartment buildings, you only need 1 to 2 to 3 deals to essentially have the income cover your living expenses. That's very powerful. That makes that the best strategy. Now, what I learned that you might be surprised to learn is you actually don't need previous real estate experience with apartments, and you don't need your own money. In fact, you can learn how to raise money from others. If you're interested in that, you might want to check out my ebook. It's called How to Raise Money to Buy Your First Apartment Building. It's in our Freedom Vault, themichaelblanc.com/vault. You can download that ebook as well as all kinds of resources to help you get started with apartment building investing. Good luck, and I'll catch you next time.